Monday here on the Financial Exchange. Chuck, Mike, and Tucker with you, and we've got a pretty darn significant rally taking place across all major U.S. equity markets on the back of the announcement earlier this morning by, I think it was Scott Bessent and his counterpart with China, who originally had it during the 9 a.m. Geneva time press conference that they put out, that tariff rates between the U.S. and China are coming down significantly, effective immediately. Big thing that we're seeing, each side stepping their tariff rate down by 115%, which I know sounds like it's above the theoretical maximum, but it's the percentage charged on goods that they're coming down by. So the U.S. reduced its tariff rate on imports from China from 145%, which was a de facto embargo, down to 30%. China, in turn, reduced its tariff rate from 125% down to 10%, with both sides agreeing to a 90-day pause and further talks before taking any additional action.
So I think some context is helpful for how investors and analysts were thinking about these talks going into this weekend. On Friday, we talked a little bit about it. The, I would say, kind of forecast out there ranged anywhere from, hey, these could land in the 50 to 80% range when these talks are over, if there's some negotiation done. And the conversation we were having was, well, what if it's extreme to the other direction instead?
We talked about this. We said, look, that you have to, consider possibilities outside of what the market is pricing in. On the downside, it was, hey, what happens if they storm out of the room and there's no progress and you're still at 145%? And on the upside, I think we said, look, the best case scenario is probably getting to 20%, which was where they were before April 2nd. So when you say, look, we ended up at 30%, it's pretty darn close to the best case scenario that we were discussing. We said, look, we're not sure that this is particularly likely, but you have to consider that this could happen. And sure enough, that's what you ended up seeing here. So I think when we talk about this, I'm less concerned with like what actually went on during the negotiations, just because I don't think it's particularly relevant or useful.
I also don't think we'll ever know. So
no. Speculating on how did this, who cares? I think the important thing is, look, what is the actual impact to the U.S. economy at this point, and where do things go from here? And I got to tell you, there's a lot of meat that we can discuss in here. So, first piece, obviously you go from 145% where companies are like, no, we can't ship anything. Like that's kind of ludicrous for us to even consider doing this. So you go from there down to a 30% tariff rate, which from talking with people who, again, are, importers of stuff from China, they say, yeah, it's not going to be as comfortable as, where things were before, 0 and then up to 10 and then up to 20%. But, okay, I can figure out how to run a business with tariffs at 30%, even if my margins are impacted.
Yeah, let's give this an example here, because, again, I think these get framed incorrectly in terms of how they actually work. Very infrequently are we actually individually, you and I, buying products from China to be shipped directly from there to us. Usually Correct. It is through an intermediary who's buying supplies to either finish manufacturing in the United States or, build a finished product in China that they stock on shelves here in the U.S. So you've talked about a lot your friend with the board game company, and I'm just going to assume that his board games cost $50 and
$21
to
make. What board game costs $50?
$21 to make.
Yeah,
really? 50? Wow.
So I got
because we're not talking about Monopoly. We're talking about like board games and games that people are passionate about, and they're small, kind of niche games. So I'm assuming they retail for what, like 50, 60?
No, so he is a higher-end board game manufacturer.
Okay.
So we're talking stuff that is low triple digits.
Got it. Okay, so sells for 100, costs 20 to make, let's call it.
Yes.
So previously, that tariff rate was bringing the cost to manufacture in the 50 to 60 range?
Yes. And by the way, because I have numbers from him on, we went around and shopped this around. He was like, look, if I wanted to make it in the United States, it'd be $93 for me to make it. in the U.S.
Got it.
And that's before handling any of the shipping, the selling to yada. Like there would be no profit for me if I were to do that. Likewise, at $20, and you take that up to a $60 production cost. Again, think about most companies. Their margins are not 80-90%. Margins usually are somewhere in the 5 to 15% range for most companies that are selling goods.
Right.
So in his case, it was basically like, look, I'm going to go from making 10% on these to losing 20 to 30% on every item that I sell.
Right.
With a tariff at 30%, it's still probably, assuming that he eats all of the cost, which he's not going to, still eats through probably somewhere in the ballpark of 60 to 70% of his profit.
Right.
When it's all said and done, his profit will be reduced by somewhere around 20 to 30% as a result of this.
Yeah, and again, so if your cost to manufacture is $20, you're bringing that up to $27 once you include the tariff, passing along $7 a price increase to a game that costs $120, let's call it. That's even if you're just passing along half of it, it's something, but it is probably not detrimental to the buyer.
So this is something where you look at this and you say, okay, so these importers of goods from China are going to, if they're still alive, because again, there are some companies that didn't plan or didn't have the wherewithal to be able to even stomach a 4 to 5 week situation like this. So you have some that might have gone out of business. I don't know how many. I don't know, exactly which ones. But the ones that are around will say, okay, we're going to spool our factories back up. We're going to get things loaded onto ships, and we're going to get, everything moving. Now, you've got the additional costs that you've got to pay because of the tariff. That's part one. Part two, remember, a lot of people paused factory production in China at the outset of this. When you start those productions back up, A, probably not going to be back up to full speed right away. B, you better believe that all of those, big old container ships that, used to be coming from China have since been rerouted to, okay, there's more imports coming from Vietnam and Thailand. So great, now we got to get these ships back to China so they can bring the stuff. And there's a lot more coming because companies are going to want to front run tariffs. The people that I've talked to are saying that freight rates are expected to go up anywhere from 50 to 150%, depending on the route and exactly how much demand comes through. So where you land with this is, yeah, you're still going to see some sporadic disruptions of different goods and things like that probably roll through the course of the summer and into the fall and maybe even early winter. It's like any time that you have a situation like this, you're not going to have anything right back to how it was. Any of those catastrophic situations are taken off the table here. But the stuff that's going to be coming back in now has a bunch of additional cost that's attached to it. So the way that you deal with that is either you eat it yourself, you pass it on to consumers, probably some combination in both cases. What does that do to corporate margins, and then what does it do to inflation, and how do those things impact the U.S. economy? Those are kind of the next thing that we worry about now. Yep. It's not because this is like all doom and gloom, but these are real things that we're going to be seeing and having to deal with right now. They're real costs that are being borne either by companies or by end buyers of their goods.
So as happened on April 9th, which was the rollback of what was April 2nd again? It was Liberation Day. It was the rollback of Liberation Day, or at least a significant portion of it. This seems to be a rollback of one of the worst case scenarios